Um, I'll go through some key points, some key points first, and then we'll get into the normal routine. The first is identifying trading versus investing. So I've got Bitcoin and Ethereum locked away on my hard wallet. Couldn't give a shit. I've got some on Celsius, staking. I believe I got a little bit in Aave. Couldn't give a shit about it because it's long term locked away, following the plan. Plan stays, nothing's changed. Bitcoin's still Bitcoin, Ethereum's still Ethereum. I'm in that for the long haul. On the trading front, it's different. So you got your trading cash, you got your trading portfolio, then you got your investing portfolio. So if you mix them up and mix your investing portfolio up with your trading portfolio and start trying to trade the investing portfolio, you probably get shaken the fuck out of it and lose it, and you won't have any investments left. So identify which one's which. Investing portfolio should be bigger than your trading portfolio, but everybody's different. The next thing, use stop losses. Use fucking stop losses. Every time you enter something, you've got the plan. Make your plan. If 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 you found out that your plan is flawed and there's things that you didn't account for, cut the trade. Nobody's stopping you from cutting the trade. You can always enter back in. It's very difficult psychologically to do. I have trouble with it myself sometimes, but if you set a plan at the start, where's the stop loss? This trade is invalid when it reaches this stop loss. Cuts me out. That's how much I'm losing. Can't lose any more than that. That's the end of the trade. And if I realize something that I didn't take into account, after I've set that trade or an hour after or the next day, you can just oh, wait, I fucked up here. I shouldn't be in this. Cut it there. Cut it there. Don't let it run. Don't wake up every day and stare at your mistake. Number three, take profits when you are up. If you've been around for a bull market, I guarantee you that you've watched shit go up in your wallet, and then you never thought you were a greedy person, and then you realized when it's down lower than what you bought it for, you actually are a greedy person somewhat because you didn't sell a single part of it or raise a stop loss at all. Don't hold altcoin downtrends if they are just trades and not long-term investments. You can always enter back in. So this is the shit that I write in basically every single newsletter for the last year and a half of doing this. But I will happily repeat it every single week. Don't hold altcoin downtrends if they are just trades and not long-term investments. Why would you? Why would you? Don't risk more than 1 to 3% of your portfolio on a single trade. Mate called me before, said that he's got a mate that had 20K in Luna and just wrote that whole thing all the way down. I'll guarantee you that 20K is more than 1 to 3% of his portfolio. If you lose 3% of your portfolio and you've only got 97% left, you can recover from that. But if you've only got 30K and 20K of it's in Luna, then that's a issue. Diversify your cash stash. So really, what you should be doing is diversifying your cash stash. So you got cash stash, you got some cash in the bank, you got some cash in the cash, you got some cash in USDC, you got some cash in USDT, you got some cash in USD. Not anymore, but UST. Would have been at the time. Diversify your cash stash. One fails, you've still got 8 other forms of cash. Always say this. So my on Celsius, I got a bit of cash. Got the DAI, got the USDT, got the USDC, and got the other one. You diversify them. So if there is a weakness, because this is all emerging technology, this is all emerging software. Crypto is so new. We know that it's like the internet when it first started. And how many problems come up with the internet, like viruses and hacks and all that shit was new back in the day, back in the 1990s and the early 2000s. All that shit was brand new problems. Like, oh my God, shit's just getting hacked. This fucking tech stock that I bought in 2001, they got hacked. They lost everything. They're closing. Like all these unforeseen things that can happen in emerging technology is unfathomable. You couldn't imagine some of the shit that's going to happen and has happened, unless you got crystal ball or whatever. You might guess one, but you won't guess them all. So diversifying your spread and just prevention better than trying to fix it. So diversifying your cash stash. If you had 10% in UST, wouldn't be such a problem, as much of a problem. You still got 95% of your cash. Diversify your yield. So you're getting yield from Celsius, Nexo, BlockFi, Compound, Aave. One of them has an issue, sort of like you got, you might be getting yield on an exchange, Binance or FTX. It's work, but it's extra work. It's a lot easier and you feel a lot better having everything in just that one place. Makes it easier, but really that makes a single point of failure, and that makes it an issue. So if you want to really like do the right thing and protect your shit, then you diversify your cash stash and you diversify your yield, where you're getting your yield from. So like if there's worries about Celsius with UST, or there was worries about BlockFi, or fucking something, there was a bug in Compound, some drama, or what, or that Yearn Finance when that fella left, you don't have all of the shit in just the one. Messages for heavy to intense rainfall on the Sunshine Coast. If you've spread your yield, then you're spreading your risk, mitigating your risk as well. So all that sort of jazz. And then 8 is things can change very fast, because like I just stated, it's emerging technology. We're on the forefront, lads. This is crypto's not going anywhere. We all know that. This is I can guarantee you that, man, things were back in 2017, 2018, and 2019, when shit started going pear-shaped. Or not 2017, 2018, 2019, when shit started going pear-shaped, people actually thought Bitcoin was done. Like nobody thinks that anymore. It's just, how low is it going to go? That's the question. How low is it going to go? It's on corporate balance sheets. Companies using it. Countries are using it as tender. Crypto.com owns fucking nearly every sporting stadium in America, it seems. Like these things weren't even a pipe dream back in 2018, 2019. Like the emotional conditioning that you get from watching this shit happen, and even losing some money, also knowing that if they are long-term investments in Bitcoin and Ethereum, you technically haven't lost anything if you're just riding it out. But if by being around and seeing all this different shit going on, and watching your portfolio going up and down, the emotional conditioning that you're getting to understanding to separate yourself from being in love with one coin, just seeing that anything can happen, things could just change at the drop of a dime, whether it be it to the downside or to the upside. I guarantee you, when shit does, could be weeks, could be months, could be days, when shit does turn around, and the big players, the horse and chariots, come back in with all the millions and millions of dollars. You'll notice in previous times, it's just green candle after green candle. They move fast. They move very fast. So things go up and things go down. Things go up. Things go down faster than they go up, but they still go up. They still go up fast. So things can change very fast. This is emerging tech. So, people in like 10 years, you just follow what the geeks are doing. You follow what all the nerds are doing, where all the money's going. All the money's going into crypto. You can see that, like I just said, they bought the Lakers stadium. They bought the Miami Heat stadium. Pretty sure they bought an NFL they bought Texas Cowboys stadium, I'm pretty sure. Something like that. Like the crypto's where the money's going, and then you also follow where all the geeks are going, and all the geeks are going to crypto. So it's not even a question where the space is heading. Really, it's just the journey, and you'll have 5 years, 10 years, people will be asking you questions about it that you learnt, and you'll be saying, oh, back in the 2022 dump, you'll be 5 years later, you'll be recalling, like I'm recalling 2018. So anyways, that was just a little friendly rant, and get into it if anyone's going to say. So crypto fear and greed index, extreme fear, obviously. Be interesting to see whether it's down from where we've been. Oh yeah, that's low. That's quite low. So extremely fearful, and this is what, breathe in. This is what it feels like. So the bottoms, price lows, maximum fears. They usually have news-driven events, be it the inflation, or like a or like the lunar thing. There's usually an event to signify the moment and the price action, and just like there is at the tops, there's like a Bitcoin futures released, or like a, there'll be an ETF. The US ETF will probably be the next top, or Ethereum 2.0 will probably signify the next top. There's like a positive event for the top, a negative event for the bottom. That's just typically how markets work. So, the longer we spend in extreme fear, the sooner we get the fuck out of it. That's my opinion. Nupal, net unrealized profit loss, showing how much unrealized profit is in the system, and then matching that by the emotion. So we're in fear. It's if it's orange on the up, moving up, that's hope. That was hope. This is fear. So we're moving down into fear now, and you can see that we're much more fearful than we ever got uh, in terms of unrealized profit and loss. So things that people haven't sold. What's next? SP 500 and Nasdaq. Let's go puke at the traditional markets. I'm actually just going to show you this first while I got it up. This is the logarithmic curve zone. You'll start seeing this a fair bit on Twitter probably. It's just another bit of hopium, I suppose, for people. You can see that it's just basically a mathematical logarithmic curve zone where price spends most time in the green. It basically works as a support. That was the COVID crash right there, and you see that we're down below extremes on this metric. So it's just a metric that's trending. Just want to show you first, and just show you that it's basically just a big logarithmic trend with the curve, and based on previous price action. Logarithmic works by percentages, so linear wouldn't really work at all. Logarithmic. Stock market, S&P 500. Well, that's fucking disgusting. They should all be ashamed of themselves. America should be ashamed of themselves. You see if you can get some sort of pattern there, but barely. This thing fucking walk itself out for a while. You probably end up seeing it come down, maybe another 20% over this stretch. It's basically crab walk. They usually, these runs recapture most of what they've gathered, and the gathering began post COVID. So the high before COVID, the COVID crash. So that's minimum target for the US stock market. Just chuck a couple of indicators on extremes. Just fuck yeah. Just briefly brushing over it. Looks like it's got further to go. Throw some moving averages on it. Far below it. Wouldn't even think of it turning up. You can look at what the stock market's likely going to be before open. So you can check like pre-market open on the internet, S&P 500 pre-market open. And you can see what it's trading at before market open. A lot of time that signifies what Bitcoin's going to do as well. It's a bit of a cheat code as well. I haven't used it too much, but I know a lot of people that do. They watch the US stock market open to see how Bitcoin's going to act. But yeah, you just draw a bit of a bottom trend line here, just real basic and stuff, and you could sort of get a bit of hopium that it's going to bounce here. If we go off candle closes, then it's broadening as fuck. Not much fun. Not the happiest time for the stock market. We look over to the Nasdaq, specifically tech stocks. You might have heard of Mike Novogratz. Seen a video of him today saying that he's expecting the Nasdaq to come down to 10,500. So that's another. That's the date. Sorry, price range. It's another 7%. So not much in crypto space, but a lot for traditional finance. So the tech stocks have been copping it. I've had a few people, obviously, like family and friends. Oh, how about crypto today? I say, fucking, how about everything, brother? How about everything? How about Netflix? How about that Netflix you're watching? I heard their stock's down 80%. fuck off. But yeah. Anyways, you know, the recovery for the stock market probably in tandem with crypto. Gold. Oh yeah. So like I've said before, gold's basically the trade where I've never seen so many like legendary investors or high profile investors that I've always listened to and followed. They basically always have differing opinions. This gold right now is the first time that I've ever heard them all completely agree on something, and that's the fact that you know it's basically a big cup and handle formation, and then the technical is this is what's seen on a cup and handle as rebuilding the strength to break top lip of the cup. So gold moves really slow. It usually does act really well with patterns. You see, oops, you can see this huge bull pennant. This was mainly one of the reasons why I was bullish on the Bitcoin bull pennant. Obviously, wrong. The reasons I was bearish on on Bitcoin in the bull pennant was, if you remember, the volatility expansion coming and the stochastic momentum was pointing down. But the reasons that I was bullish on Bitcoin in its pennant was basically because of what gold just did. The same sort of shit, the same bullish pennant leading the same amount of time basically, except this one broke to the upside. And then you're getting the retest of the pattern. You can see me personally, I drew these lines here because I had multiple, I had four, like I divided my cash that I wanted to put into gold into fourths, and this is basically the areas that I was injecting them. So I bought some there, and then I bought some recently down there. So you know, yeah, no, the I think the further this goes, the further the height, like the further the probabilities of it continuing shrink drastically. You can see also this is a falling wedge with not really bullish divergence, but stochastic momentum starting to perk up nicely. 3 buy signals. You can see that it's condensing, volatility contracting, so you expect that we might likely start moving sideways quite soon. The 200-day moving average is just a monster of a support there, that green one. So that's where you get that huge buy pressure coming in at the 200-day moving average, because everyone looks at that one. Bullish on gold still, probably from what I'm picking up from my technical basis, this perspective, bullish as fuck on this. This is probably coming up to some of the last times that you'll probably see gold at this price. You can screen you can timestamp that quote, and then I just mix it with everybody that I listen to as well, and they're all saying the same thing, that they usually disagree with each other. So that's that. DXY, the strength of the dollar against a basket of other currencies. Yeah, so this is basically people leaving assets, markets are crashing and racing into the dollar. So the dollar is strong. This thing's fucked, basically. Good for America as a country. The dollar's getting stronger. But as an investor that holds assets, you want the dollar to be going weaker. So, this here, March 2021 down to May 16th, basically was like the last big stretch of the crypto where it was pumping, and you can see that the dollar's going down. It's not exact, but obviously you're either in assets or you're in the dollar. So a lot of the time, so you one's going to be stronger than the other because the capital flows are going from into dollars. So once this starts falling, it'll be good. But I don't know if you can really get any patterns from this. I'm just drawing lines in the sand here. Just looks like a strong as fuck ascending channel that's just walking out. But we are on the top of that only because it's just been drawn. But you see, keep rolling down. 3 touches is the definition of a trend. That's what they say. 1, 2, 3. 1, 2, 3. So high highs, high lows. Dollar is walking itself up. Might get another upthrust, but hopefully, yeah, you'll see when this starts retracing, the assets likely starting to recover. That's why we put it on the bull score as well. You see the DXY is on the bull score as well. Gets a red light. Bitcoin trend. We know what that is. It's down, boy. Straight down. It's brutal. That is brutal. We have basically 3 trends. So you got the primary trend, the secondary trend, and then the tertiary trend. Primary trend was up, secondary trend was down, and the tertiary trend was up before this happened. So you got up, down, up, and now things have changed though, because we're getting a change of trend on the primary. So that is signified by high, low, higher high, slightly higher low, and then lower high, and then lower low. So big things happening, big things changing. That is a change of trend on the primary. So it's going to take a bit to build that back up. Bitcoin ranges. Interesting to throw the old Blockchain Bulls range spectrum on it. There you go. There you go. We see we come into this sell area, the red being the sell area of the Blockchain Bulls range spectrum, able for everybody on the indicators. And you just type in that and you'll be able to click it, use it for yourself. We made it. Sick. And you'll see that come up to the sell area and then just cut through 1, 2, 3 ranges. 3 ranges. On this chart, this is perp inverse swaps. So of course it's going to be lower. I don't know why I'm using that one. No, all the perps fucking died. Whoa, that went low too. Yeah, anyways, we went down into the buy area on the final range, the final boss. And then bounce back up. So crucial moment for Bitcoin, whether it's gonna come back up into. I'll bring this into. I'll meld this into the patterns as well. We've got a big falling wedge pattern now. So bull pennants were so last week. this falling wedge is what's on now. But yeah, like you can see, it's being violated already. So there's different ways that you can draw this. It depends on what chart as well. So there's spot price charts have a different reading, but there is the saying. The saying is you use logarithmic for the way up and linear for the way down. So basically, you flick it over to linear right there, and then you'll start seeing patterns like this make more sense. As you can see that there, starts gluing together a bit better. So if we talk about it like that, we've got a falling wedge coming into a knot. It's a knot there, so it's a high liquidity zone, 22 to 24K. That's one of the reasons why I've talked about 22 to 24K. Haven't talked about it much. Haven't said that we're definitely going down there. I've just brought up the facts that there's a knot there. 1, there's a CME gap there. 2, and the volatility expansions that have occurred on the weekly chart have usually been the percentage amount that would lead it to either 58K or 24K. So there's 3 things that point to the price going to to that area, and you could sort of picture it now. I suppose it seems quite far, but 24K is only 10%, 15% lower than where we are now. So you could do that in a fart. Bitcoin could fart that out, hit that not liquidity zone, boost back up. From a shorter term time frame perspective, we're talking patterns here. So you just grab this trend line, see if there's any deviations. Dirty as, filthy thing. Play around with this. Like I said, support and resistance lines are easy because you can't fuck them up because they're horizontal. You can see where the support is. You can see where the resistance is. It's a short-term range right there. You can see that low reaches that high. Short-term range. That low, that low, that low. Same as that high. You can't fuck these up. When it comes to short support and resistance lines, everyone gets the same one. Everyone gets the same, basically more or less. But when it comes to diagonal trend lines, you'll fucking depends on what exchange you're on, what chart you're on. Everyone gets different readings. Everything's all it's abstract. Yeah. So descending, broadening wedge, walking itself out, heading down to the knot box potentially. It's gross. If you are going to open longs, then you open longs, preferably down the bottom side of the trend line, if you think that's done enough to move up. So ranges.
Hi, Darren.
G'day, mate. How are you?
Very good, mate. Good.
Are you listening to?
Paulie.
Yeah.
Open my Snapchat and then fucking call me back.
All
Fucking with Scotty and he's fucking put a fantabulous fucking tip on for you.
right. All
All right,
right.
mate.
Give me a minute.
Paulie.
Paulie,
Sorry, bud.
got a hot tip coming in, brother.
Yeah, something like that. I better mute myself.
Hopefully it's a ripper, huh? What is it, horses?
I don't know. I'll better find out. A couple of mates are down in Canberra working on a shutdown. They get pretty loose, so it could be anything.
It's either horses or shit coins. I don't think it's shit coins. Fucking yeah. What's next? Moving averages. Blech. Hey, Steezy. Fucking pass.
Terrible.
The patient, mature investor would wait until these at least start curling up. Doesn't matter if the price is over them, but if we want to start calling bottoms, really, if you want to, do it properly, you wait until you get like at least a curl up. Obviously, more the better. That would be step one, to just get at least a curl up. You can see that it happened here. It's late, yeah, happens late, but that's just good practice. That's what they say that they do. I don't wait for that shit really. I just wait for the crosses and stuff, but on the lower term time frames, I like crosses on the 8 hour. Anyways, what's next? Bitcoin volatility. So might be able to find a. Here we go. All right, Bitcoin volatility. You can see that the volatility is measured by the Bollinger Bands. You might have heard the Bollinger Bands before. When the Bollinger Bands get squeezed tight, like we've been talking about, we had some of the most squeezing days ever. You can see how choked it got. You can see that it ended up just rolling down. So these can go either direction. It's direction neutral, but then you line it up. What we're doing is you line it up with the momentum. That's the best way to sort of tell. and as the squeeze was on, the momentum was sort of heading down. This is what made it quite a difficult one, because the momentum was oscillating basically in the middle, and this was the moving average on this was moving down though, so that leans to the downside. The RSI momentum was basically flatlining. But yeah, when you put it into this perspective, once all of our our algorithm triggered, our moving averages crossed, and we started getting bull score of 0 or real low bull score around this area, you sort of start getting suspicious on what which direction it's going. Yeah, end up being down, obviously. So they go one way when these squeeze. They're definitely going one way. So you can see here, squeeze down. Here, squeeze up. Here, squeeze down. Squeeze when it goes to blue. Blue, up. Blue, down. Massive amounts of blue, massive amounts of down. So we might be faced with massive amounts of blue and massive amounts of up if it's not a V bottom recovery, and needs a lot of and yeah. So the volatility expansion, you can see now that we've moved from extremely low, and then the pop was huge, like we were expecting a huge pop. This thing is going to move, and it did, and massively. So when this goes red, that means it's basically pushing to the outsides of the Bollinger Bands. This moved from green to fucking 93% in one day, which is massive. And that was that huge red candle of, what was that percentage wise? That was fucking 11%. So big for Bitcoin. So the volatility is massive. And you'll see that when we start we get a couple green candles, probably like do it. And then this will start moving. You want to see this pointing down, the moving average pointing down, bare minimum. What's better is to see the moving average pointing down, and this crossing past the indicator, the red line crossing past the moving average. That is how we sort of see that we're beginning a contraction phase heading towards the moving average. So the moving average is that orange line in the middle of the Bollinger Band. So it's inevitable. It's just a matter of time. On to the next thing, what's momentum. We've just sort of touched on the momentum a bit before when we looked at the RSI and the stochastics. So we're coming in for the 1, 2, 3, 4th buy signal. Basically, it's just getting trigged hard down here. You can't really. It's quite difficult to keep the momentum so low for so long. See that's if we zoom out on the daily, you can see that that's a lot. That's a long time in low momentum. We can see even on this huge capitulation earlier in the cycle, we were rolling down, and then we spent 1, 2, 3, 4, 5, 6, 7, 8, 9 days, where we started getting some upwards momentum, albeit not much, because that was just fucking complete scam and chop. That is portfolio destruction right there. But it's momentum nonetheless. So momentum comes in waves, push and pull, the yin and the yang. One of these green lines will signify the start of the next run up. It's just a matter of which one. So you can see, like, here, boom, here, boom. This was an inch off being a green line because it didn't make it all the way past this green line. It needs to be past this green line to for green line to flash. But I set alerts, so you can see this white line here. That's where I set my alerts. So that triggered anyway. Buy signal gets the run up. Over here you got the double, buy, boom. Over here you got the buy, boom. The same sort of shit. Buy, boom, buy, boom. See, that was just inches above. That would have hit. See, the green just crosses. I found that this area here at 22, around 22, 23 is the best to make sure you get everything. So you hit it again there, hit it again there, hit it again there. you don't miss it. That's why I set the alerts. But yeah, anyways, one of these will be the one before we start fucking bouncing, and it could be this one, but it could be another one. It could be the next as well, because we haven't shown many signs of contraction yet. RSI is down in the oversold area. Pretty low really in the history of Bitcoin. If we zoom out a bit here, definitely goes fucking lower though. Look at that shit. Goes much lower, but usually goes lower in one fell swoop. That was 1, 2, 3, 4, 5. Well, that was 5 days, so that made me eat my words. But this was basically 1 day, 2 days down that it spent in this oversold area. That was just basically all happened in one or 2 days. Basically 1 day, 1 or 2 days. 1, 2 got lower. 1, 2, 3. Something like that there. So could definitely go lower, but we're definitely in the oversold region. Doesn't take a genius to see that. No bullish divergence as of yet. So that sort of signifies that you could likely get another leg lower if you want to see bullish divergence, because another leg lower on the chart, candle close there, boom. And this went like this. And you get that bullish divergence. And that would be a big buy signal, but obviously everybody's watching for bullish divergence, because that's basically just that's the basic. That's sort of the first thing people look at when they're using indicators. Bitcoin dominance. So this is Bitcoin dominance is, like I always say, it's the on and off switch for altcoins. It's the cheat code. We look at if you want to know what the altcoin market's doing or gonna do, you look at Bitcoin dominance, and we've been stressing for a while now on the daily briefings every morning and on these screen shares that since this broke out to the upside, so for the last 2 weeks, 14 days, for the last 2 weeks we've been saying, yo, Bitcoin dominance broke out of the downtrend, bad for altcoins. That's a huge gold candle too. See, when altcoins are pumping, this goes down. When altcoins are dumping, this goes up. So altcoins have been doing all right until 14 days ago, and this is the on and off switch, man. So now we've broken the downtrend. We made a higher high, higher low, higher low. So obviously going to be a higher high. So this is uptrend Bitcoin dominance, not good for altcoins, and not good for altcoins in the future. The technical analysis works quite well on this, surprisingly. So you can see that we went mad contraction. We're doing the expansion. So when this starts curling, you're likely, just like it did over here, we might get a bit of a breather. Might get a bit of a breather on the relentless altcoin dumping that's going on. So that's still, a couple of days away, and a couple of days away also lines up with the bull moon. Steezy, the bull moon.
It's a bull moon, but apparently it's a red eclipse bull moon.
Oh fuck.
So make of that what you will.
What's that, the death moon or something?
Yeah, it's pretty sure it's like a proper eclipse.
Wow.
Let me just pull up my 4 seasons indicator.
While you do that, I'll just have a quick look at the open interest. Open interest has had a nice flush out. This is open interest shows leverage contracts in the system, how much leverage is in the system. We want to see this being washed out. We want to see this being refreshed, basically. All the greed flushed out of the market, and going down to 10 billion. There's a lot of people getting wrecked. A lot of people closing their positions. Obviously, difficult trading right now. The price is whipsawing like a whipsaw, but yeah, this is just another one of those things where you can see how much leverage is in the system, how much greed, and it just shows that now we're down at or under 10 billion, and that's just a nice healthy washout of all the greed. Have you found your thing, Steezy?
Yeah, bro.
What do you got for me?
I got a 8 weird things you need to know about the total lunar eclipse this weekend.
Oh fuck, here we go. Let me get the hold on, let me get the bull and bear.
Oh, let's go.
The moon. Let me get the moon. Let me get the
Gotta
moon.
hear this. Gotta hear this, Bulls. Come on. This is some never fade the rock shit right here.
All right, hold on. Nearly ready for you. Just bringing up the undeniable accuracy of the rock right here, and indicators, moon phases. All right, I'm ready, Steezy.
All right, so
Talking moon.
it is the longest primetime totality eclipse blood moon this century.
Wow. Just
It is a technical supermoon. It is a global event visible by half the planet. It's got a once in 430 years twin eclipse.
No.
Highly unusual.
No, my God.
Totality will be long and dark. It will last for 84 minutes. The blood moon will shine close to an orange star. And the 8th fact, the best view is from Bolivia. Oh,
Quick flights.
there you go.
Wow.
It's going to be a big moon. It's definitely going to be a emotionally charged moon. You can already feel the, I guess you can smell the tension in the air right now across the whole market.
Leading up to it.
It's yeah, quite remarkable actually. Seeing the Twitter feed today, some big, super well-known figures saying that this is the first time they've really experienced, or it's the first time in a long time that they've felt, and seen full-blown fear, like over Tether, the whole Tether drama, Luna going to zero overnight, like a multi-billion-dollar, like these are big emotional driving events that a lot of people can get caught up in, and yeah, it's just
What would you
highly tension.
Being a well-renowned Twitter sleuth, if you will, if that's the right word, but pundit maybe. How do you compare this sentiment to when the war happened?
This is by far worse. By far.
Yeah.
By far.
Shit's on it.
Honestly, I've been in this for a couple of years now, and this is probably the most scared and fearful the timeline's been. Like, it was bad. It was bad when it dumped before this. The big dump back in May 21. This is even worse than that.
Wow.
Feels kind of unprecedented, but then we are living in unprecedented times, aren't we?
There it is. Yeah.
You know what I mean? Like, this is quite eventful in our lives, what we're seeing here. So very difficult to trade it.
Yeah, it is.
Very difficult.
Because something that I haven't taken into account as serious as I should have personally is the S&P 500 and the fact that it is basically the top of a bull run that's lasted for 11 years. Oh, wait, no, 13 years, is it? Yeah, 13 years. If we look at the screen now. All the way back to 2009. So
I feel like the crypto market's going through an identity crisis.
Yeah, so true.
You know what I mean? Like,
so true, bro.
We just need to break through that and decouple.
So true.
Because we all know that it's not. It shouldn't be tied to S&P, really. It's
Yeah.
fucking.
Yeah, that's exactly what it is. It is going through. It's a teenager. It's a
It is.
It's a teenager going through, whether it's straight or raging homosexual.
Mm.
That is what it's doing, because you've got tech, you've got the software, you've got like software that like Ethereum that's never been known. Holy shit, Luna's at 4 cents, man. That's insane. That is short of the decade. Wow.
Thanks, Stoquan. Thanks, brother. Appreciate you crashing the entire market.
Fuck, man. That's insane.
You know, I remember seeing him shitpost on Twitter not even a week ago. I think it was literally 2-3 days ago. He was going on Twitter saying people who say it's going to depeg, and Luna's going to go to zero, need to be taught some pegging, themselves. Like fully going on it. And then,
True.
yeah, this sort of
Humbled
happened
bitch.
overnight. Yeah, and he's
Stress
just
tested and humbled.
just giant, really.
Yeah,
Not good for the whole space, man. This sort of ruins the reputation that we don't need,
Fuck yeah, it's shocking, man. That
It's
guy
not-
should be hung in the streets.
Yeah. I can imagine
Thrown.
the pain of everyone in the Luna ecosystem and
Dude.
in Anchor and all of that. Pretty terrible, but
Yeah, today when I clicked on this and saw that the max supply was meant to, now it's infinity. it was 1 billion this morning. The maximum supply, and if we read max supply, the maximum number of coins coded to exist in the lifetime of the cryptocurrency. So it's meant to be already programmed into it that it can't exceed 1 billion. And then
It's
today
broken.
when I looked here today, this was 3.5 billion today. So that this morning it was 3.5 billion. So it's like nearly doubled already.
Yeah. What about me mate Chad? He had fucking a fair chunk of his super in Luna.
Yeah.
And
I know a bloke who. Sorry, Paulie. You keep going.
Yeah, no, he didn't take profits. I told him when the markets was retracing 2 months ago, like, are you taking profits? He goes, oh, nah, my missus does it all, bro. I said, well, fuck, not financial advice, but I've been taking profits, you mad dog. And he goes, yeah, he didn't. Probably lost 200 grand of it.
Wow.
Oh, well.
Yeah, it's not good. I know a guy, I don't know him personally, but I heard of a bloke who had, I think he said he had over 1 million. Well, this is a friend of a friend who reckons he had 1 million in Anchor. He was earning him, I think, around 200,000 a year.
Yeah.
And then, yeah, this happened and he's just gone silent, radio silence. No one can get a hold of him. So,
Yeah. Sort of suicidal thoughts.
pretty grim.
Yeah.
Oh,
Sad for those people.
yeah.
How about that fucking TikTok video I sent you, Connor, of that guy? People like the
Man, that is so bad.
people leveraged up to the gills on Anchor Pro.
That's just full degen, full degenerate. No, no risk management.
The thing about crypto, which is, it's rough, but it's good, is the fact that if there's an inefficiency or a weak point or something, man, you've literally got the smartest brainiacs with the most money in the world just finding weak points. Boom, 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 boom. So the space like rebuilds, grows, back stronger so fast.
It's incredibly resilient. Fuck oath.
It's incredibly resilient.
Think of the amount of hacks and exploits and shit we've seen this year alone in the last 5 months. Like, fuckloads. And it's just bounced back, really.
Yeah.
And, the market's still holding up. Relatively speaking, fucking great against everything else.
Yeah. Yeah. Could definitely be a lot
I'm sad
worse.
that it's down, but I'm also happy I get to buy Bitcoin under 30 grand again.
This is like one of those this is one of those financial opportunities that you look back on in 5 years and you're like, wow, wow, I wish I bought more. I wish I bought more. It's gonna be one of those moments. Comes around once or twice a year. Yeah, bro.
Can you just quickly explain to me about the Bitcoin halving? Like, I know it cuts the miners' rates in half, or whatever, but like, how does that drive the price up? The demand side.
It's just new supply. So I think it's six Bitcoin per block at the moment. So it's just the consistent inflow of Bitcoin always coming into the market, assuming that miners are selling, but just that constant inflow of Bitcoin that's always coming into the market, and then when the halving happens, that's cut directly in half, and the consistent flow of sell orders gets cut in half. So we cover it on Glassnode, on-chain bulls sometimes when they bring it up, but I might be able to see if there's any metrics here. But yeah, it's basically as simple as that, bro. It's just supply and demand. So you just imagine like a constant, obviously the miners are going to sell it when they want to sell it, but you can just imagine this constant flow of new Bitcoin just coming in and just hitting those buy orders, pushing them down, and then that gets chopped directly in half. Mine, yeah.
Because we've got 19 million Bitcoin, and there's only ever going to be 21 million. Is that right?
That's right. Yeah, these are all on the tier 3. The tier 3 is $800 a month. I'm not paying that.
Oh shit!
Yeah, so that's why I just do it off the newsletter.
I still love ETH to death, but I fucking love it. I think it's got fucking amazing potential.
It's going to be very interesting to see what happens when they do release ETH 2.0 and the timing. I'm very interested to see the timing. So this is what they call a head and shoulders pattern. Shoulder, head, shoulder. You can have two. There's a name. There's a technical name for it when it's a double. I can't remember what it is right now. But then they go like this. This is what they do. They go the high point down, and then they go to the break.
Straight to zero.
Which is straight to zero. So
that looks like the lunar chart. Come on.
Yeah, I don't think that's gonna happen. Let's see what happens if we put it on log. Straight to zero.
Is that 1,000? Yeah.
Yeah.
Fuck, that'd be sweet, wouldn't it? $1,000 Ethereum.
Oh yeah.
Oof.
I'd be selling.
I'm actually dreaming of that.
I'd be selling basically everything in my garage to buy it.
Imagine if it gets to those prices, man. It's gonna be. If it gets through 1,300, it's gonna be full blown capitulation panic mode.
Well, yeah.
I'll have to put my missus in like Canto. So I can make some money.
I mean, this is a good liquidity zone here, so.
A big knot.
It's a big knot.
It's a fuck off big knot, isn't it?
Dirty. Ever since you told me about these knots, I've gone back and had a look, and I find them everywhere.
Yeah.
And they do come back to them. It's like, fuck.
Yeah.
Pockets of liquidity.
Yeah, it's a liquidity pocket basically. So that's something that there's this book I'm reading, the Encyclopedia of Chart Patterns, where they talk a lot about knots. fucking massive book. He talks a fair bit about knots, especially at the start, and it's sort of like when you do see something like to put into your sort of routine, right? Even if you're advanced or just beginner, when you're looking at a chart, you see something that's going up, and say we're here or we're here or we're here. Just always go back and look for any knots that you might consider, and then start thinking about worst case scenario. Hang on, there is actually a higher probability than not that we do reach this knot. Just put that always in the back of your mind. Hey, hang on, we've had this parabolic run, we probably will reach this knot. You go, obviously you go knot by knot, so knot. I'm still the thing is this knot, the term of the knot, this was coined by the guy that wrote that book. I'd heard about it before because I do a lot of looking up that Bukowski's work online, because he's the one that does all the statistics, the probabilities of pattern breaks. I find that extremely valuable, and I read about the knots a bit, but it's hard to find much data on knots in general, and exactly how to identify the priority knot, other than you just start from the high one and then you work to untie them as you go, and you assume that the first knot, I mean, I wouldn't really call that a knot because it's ascending, so the knots are usually, like I said in that video, you can fit them in squares, so I'd count that as one. Albeit that quite ascending as well. I'd call that a knot, but also you see these knots here, like that's a small knot. That's a knot, because the knots are meant to last quite not that long, not as long as that. So that's a large knot, and that's where it starts getting messy. That's an obvious knot, because they do say that knots are generally last between three candle closes and 7, so like 3 days to a week on the daily chart. So you can see like 1, 2, 3, 4, 5 out. So that's just a standard knot there. But then when you start getting to these bigger ones that start drawing like ascending patterns, like this, sort of how much of a knot is that, So still, there's just, like I said, there's not much data on knots. If you can find some shit that I haven't seen, I'd love it. The last thing is the funding rate. So I posted in the Bulls chat that looks like we're trying to find a bottom for a bounce. That was based on a few things, but primarily waiting for the funding rate to switch was like the last piece, the last infinity stone. We'll see that the lower term timeframes, we're pulling back from extremes, starting to get buy signal, starting to get upwards momentum on the stochastic on smaller term time frames like this. So you can see, for example, in this 2 hour, we're starting to click over to the buy. We were under here, my alert triggered, we flicked over, and this starts curling. So start looking bottomish, especially when you start seeing these long reversal wicks. Basically these are, and we're moving to a secondary extreme, which has a high probability. Obviously Luna was a different case, because that's just complete craziness. Then that shits on all technical analysis. But if we are using technical analysis, you see two hits of extreme, very high probabilities of starting to work your way back up to the mean, and then the exhausted where's the volume? I don't have it on this chart. The exhausting selling pressure, because these volume spikes, that's a lot of volume. as you can see, that's quite a lot of sell volume. And especially the fact that it's been consistent. So 1, 2, 3, 3 days straight. See, earlier in the year, bang, just the one, bang, just the one. These big capitulation days, but this consistent volume, it's a lot of Bitcoin getting fucking swapped around. No wonder Tether's getting put under duress. But yeah, like you see this is like, that's just typically like a long wick reversal candle, long wick reversal candle, long wick reversal candle, long wick reversal candle. You see these huge long wicks, long wick reversal candle. But the day is far from over. The day is far from over. So we'll see what continues there. But yeah, the funding rate was what I was going to. So you can see that the funding rates started going hectically short now. See these huge numbers here on the funding rate. So what I was waiting for was this to start showing some serious red. So I posted that we're going to start looking for a bounce, like I think it was like here or something, or here, something like that. When we were getting buy signals on the momentum and the funding rate was going red like here, because finally people are giving up. This shows that finally people are giving up on Bitcoin, and they're going to start betting against it. They're going to start watching it.
20 minutes, half an hour. Yep, and just put my drink in the freezer, please.
Sounds like you got a good girl there, Paul.
Oh, fuck.
You got a good girl on your hands, Paul.
Oh, she's working too on her laptop, and she's got to put our daughter to bed, and then she's going to bring me food in 25 minutes, and we'll smash it while I'm watching you.
We'll wrap this up soon. Just showing the funding rate. You can see this is math. This is starting to get a really big now. We zoom out to the predicted. You can see that the predicted doesn't get this big, hasn't got this big for a long time on the hourly, for months, on the hourly. So this is when a lot of people are, I find the predicted has a lot more accuracy. Obviously, predicting, the name predicted isn't a front. It truly does predict movements. But yeah, when this started moving down, so 1, 2, 3, 4, 5 descending candles is the funding rate strategy. You got one ascending one here, so that was where things started changing. Unfortunately, I jumped the gun there. But you can see now that we've made this ridiculously low funding rate score where people have just rushed to short Bitcoin. So this is capitulation. This is people giving up, and trying to catch the move down to 24K or 20K or whatever they're doing, because leverage traders are in majority aggressively trying to short the fuck out of Bitcoin right now. And this is the final ingredient that you need to see. You got extremes on all the other indicators, Bollinger Bands, momentums. You got extremes on all that sort of stuff, the candle wicks, and what you want to see now. What I wanted to see was the funding rate, and everyone giving up and betting that it's gone further down. And that's just the perfect time for it to go up. So I opened up a little leverage long here. I think it was 27,600. So it was all the way up here. Not the best before the stream. Not the best spot. But seeing these funding rates so low, that just makes me want to go against the grain there and bet against what every other fucking idiot's doing, rushing to the party and trying to late short Bitcoin. So there you go. That's pretty much covered everything.
Just got to survive.
Just survival.
Just got to survive.
Survival of the fittest. Let's start.
Just like Paulie said in the group chat today, you just got to be like water, go with the flow, adapt.
Go with the flow, Paulie.
I've got a mate spot that they don't like fucking ETH. They think all these other coins are going to take over, blah, blah, blah. And I said, total value locked is all in Ethereum, right? And think about this. All the money's in Ethereum, yet Ethereum's kind of slowish, and it's got the most highest gas fees. I said, what do you think is going to happen when they fix that problem?
Mhm.
You know what I mean? When
Yeah.
they,
And with the merge too, you know, with everything being more efficient, with the more burning mechanisms, you know, potentially deflationary.
well,
It's
Yeah.
a very exciting time for ETH, I feel.
that Vitaly bloke, he said we need to get ETH to 50-cent gas fees, and then you already know by him saying that, well, if he wants to do that, fucking 100% he'll
Which,
get
you
that
know,
done.
I think it's doable. I think
Yeah.
they can accomplish it.
Oh yeah, they will.
It just feels like,
It's just a matter of time.
yeah.
It's funny. I was having a conversation with Matt recently where we were talking about like how Solana, you know, there was that Solana drama as
Yeah.
well, and all that sort of jazz. And it's like they all these Ethereum killers, all these other coins, they say, you know, we're faster, we're cheaper, we're better, all that. But it's like at what cost? And then when
Yeah.
that cost gets exploited, and then they go back to the drawing board, like fuck. Look, how are we gonna do this now? And then ETH's like, you know, get in the back of the line, cunt.
Yeah.
Like we've been trying to solve this the whole time, dipshit.
Fuck yeah. I just think it's, if you're in this market now and you can manage to stick around and learn, it's the fucking best experience you'll ever get, you know, being able to see what survives the hype, what doesn't, you know, to fully flesh out the fundamental projects that you know are long-term bets that are safe.
It's very cool.
And
It doesn't.
yeah.
You don't need to be a fucking like a geek to think that this is sick. You've got front seat view at the changing of history, and also like for example with that Luna thing that's happened. It's like in financial, like that sort of stuff happens in traditional markets where like, you know, things go bankrupt and go to zero and all that sort of stuff, but it's a lot more private, a lot more behind the scenes. This
Yeah.
on this transaction, on these public ledgers where Twitter and everyone can see where all the money's gone, or Luna Foundation did this, Luna Foundation, you've literally got front seat theater seats, like get the popcorn ready, like you're literally watching people with billions of dollars moving, how they're acting and
Oh,
how it
fuck
all
yeah.
ties up. It's fucking entertainment plus, mate. I haven't watched Netflix
Man,
in months.
if you want entertainment, go on crypto Twitter. It is the most insane, wild shit you will ever read. Like, it's crazy. Every single day there's something new.
There's something new every day, eh?
It's, yeah, if you find like Twitter, like crypto's getting boring just looking at charts, just go on crypto Twitter, follow some of the big players on there, or the big meme lords, and you'll like, it's crazy. It's so entertaining, and you learn a fuckload too at the same time,
Yeah,
because they, you know, they drop alpha of how shit works
yeah.
in an interesting way.
Very true.
It's just, the industry's wild.
Very true. Very true. Oh well, there you go. Nearly an hour and a half, boys. Probably wrap
Good
it up,
shit.
eh?